Welcome to the deep dive. Today, we're really zeroing in on Mahindra and Mahindra, specifically their Q4 FY25 financial results.
Mm,
We've got the audited reports standalone and consolidated the board meeting outcomes, the auditor's report, the whole package.
right. Quite a bit to go through.
Exactly.
Yeah.
And our mission really is to sift through all this, pull out what really matters, give you a clear, engaging picture of how M&M is actually doing.
Without getting bogged down in every single number.
Precisely. We want the key insights. Okay, ready to jump in.
Absolutely. Yeah, these documents should give us a good sense of the drivers behind their performance. It's not just the numbers, but the story they tell about the different business units.
Okay, let's start with the big picture then. The consolidated results for the full year ending March 31st, 2025. What are the headline figures?
Well, the first thing that jumps out is the top line growth. Total income from operations hit 1,059,210.82 crores.
Wow, okay. And how does that compare?
That's up quite a bit from the previous year, which was around 1,039,078 crores. So a really healthy increase there. Suggests strong demand.
And did that translate to profit?
It did. Profit before tax also climbed nicely. It went from about 15,000, almost 16,000 crores last year, up to 19,079.62 crores this year.
Okay.
And the net profit attributable to the owners, that also increased, reaching 12,929.10 crores compared to 11,268.64 crores before. So yeah, the overall consolidated story is pretty solid growth for the year.
And the final quarter, Q4, did they maintain that pace? Finish strong?
Yeah, looks like it. The trend continued. Q4 income from operations was 42,599.31 crores, up from about 35,451 crores in Q4 last year. And the net profit for the quarter also saw a good jump, 3,295.7 crores this Q4 versus 2,754.8 crores last Q4.
So sustained growth right to the year end.
Seems that way. Oh, and also important for investors, the board recommended a dividend, 25.3 per ordinary share.
Okay, good to note. Right, let's get into the specifics now. Segment performance. How did the automotive side look on a consolidated basis?
Automotive really seems to be, firing on all cylinders. It was a major growth driver.
Okay.
For the full year, revenue hit 90,824.58 crores. That's a big leap from the 76,155.98 crores the year before.
That is a big jump.
Yeah, substantial. And Q4 kept that up almost 25,902 crores compared to about 20,907 crores in Q4 FY24.
And the profit from that segment?
Also strong. The segment results, before looking at associates and JVs, came in at 7,930.96 crores for the year and just under 2,100 crores for Q4 alone. So, yeah, automotive looks like a key pillar of their success right now. Maybe new models hitting the mark.
Sounds like it. Definitely strong. Okay, let's switch gears to the farm equipment sector. How did that perform?
Farm equipment also grew its revenue, but maybe a bit more moderately compared to auto.
Okay.
Full year revenue was 35,373.37 crores, up from 33,474.15 crores. And for Q4, it was 7,933.25 crores versus about 6,790 crores last year.
And profitability?
Segment results were 4,933.56 crores for the year and 941.42 crores for Q4. But, what's interesting here?
Yes.
The standalone notes actually mention a protracted slowdown in the farm industry. They point to high interest rates and inflation as causes.
Ah, okay. So growth, yes, but maybe against a tougher backdrop.
Exactly. It seems like there are some real headwinds there. High interest rates, making loans pricier for farmers, inflation hitting their wallets. It paints a more, nuanced picture than just the top-line growth suggests.
Right. That context is important. Growth despite challenges. What about the other segments briefly? Financial services, industrial businesses?
Yeah, we have those consolidated figures too. Financial services brought in about 18,300 crores of revenue for the year, 4,827 crores in Q4. Segment result was around 2,937 crores for the year. And the industrial businesses and consumer services segment, that was nearly 19,000 crores revenue for the year, about 5,087 crores in Q4, with segment results around 125 crores annually. They're clearly contributing to the overall positive result, even if you don't have as much detail on the drivers here.
Got it. Okay, so that's the consolidated view. Let's shift now to just Mahindra and Mahindra Ltd itself, the standalone results. How do those look?
The standalone numbers also show a positive trend, though naturally the figures are smaller since they exclude subsidiaries.
Right.
For the full year, standalone total income from operations was 1,018,624.53 crores. That's up from just over 1,000,000 crores last year.
And Q4?
Q4 standalone income was 31,608.67 crores compared to about 25,433 crores in Q4 FY24.
Profitability keeping pace.
Yes. Standalone profit before tax hit for 15,650.96 crores for the year and 3,345.02 crores for Q4. And net profit after tax attributable to owners was 11,854.96 crores for the year, or 2,437.12 crores for Q4. So the core M&M entity is also looking financially healthy.
Okay. Now, we mentioned those headwinds in farm equipment. The standalone notes apparently gave a bit more detail on the farm margins.
They did, yeah. Looking just at the standalone farm segment, which includes their Powerol business, yeah.
Right.
Their profitability in FY25 got a boost from a few things. Commodity prices being relatively flat for the last couple of years helped keep costs in check.
Okay, that makes sense.
Plus, they got operating leverage, basically better efficiency as volumes went up, both domestic and exports. And they had a good product mix, with southern states performing well.
But I sense a but coming.
Well, yes. Despite those positives, the notes are clear that the international side of the standalone farm business faced major macro challenges. It actually ended up with an overall loss of 104 crores in FY25.
Ouch. So domestic strength, but international weakness.
Pretty much. But importantly, they stated they have strategic and tactical measures underway to get that international arm back to profit within the next 12 to 18 months. So they're acknowledging it and acting on it.
Okay, that's crucial context. It is a mixed bag then. Strong domestically, but dragging internationally. And there was a write-off mentioned in Q4.
Yes, that's right. A significant one on the standalone books. In Q4 FY25, M&M standalone took an investment write-off of 654 crores.
Related to?
Related to two international ventures, MAM, which is Mahindra Automotive Mauritius, and Japan Sampo. Now, it's really important to note, this write-off is not counted within the farm equipment segment's results we just discussed.
I see, so it's accounted for separately.
Correct. At the consolidated level, though, this write-off led to a 156 crore loss at the net profit after tax level for the whole farm business, specifically because of these MAM and Sampo issues. It definitely signals some difficulties with those particular international investments.
Understood. Okay, let's switch back to auto, but the standalone margins this time. What did the documents reveal there?
Right. So Q4 FY25 auto standalone margin was actually a pretty healthy 10% if you exclude the BEV, the battery electric vehicle business.
Okay, why the exclusion?
Because the overall reported PBIT percentage profit before interest and taxes looks a bit lower. It's diluted. And that dilution comes from the contract manufacturing they do for MEAL, their EV arm.
Ah, okay. Can you break that down?
Sure. The traditional auto standalone business, internal combustion engines mostly, generated revenue of 22,930 crores and a PBIT of 2,300 crores. That gives you the 10% margin.
Right.
But the ESUV contract manufacturing part, that brought in 2,046 crores revenue, but only 6 crores PBIT. So a tiny margin, just 0.3%.
Wow. Big difference.
Huge difference. It really highlights where the current profitability lies, still very much in their established ICE business compared to the newer EV manufacturing side.
That's a really important distinction. Okay, let's circle back to the Farm International strategy. We know they're facing headwinds, but what's the underlying strategic value they see there?
Well, these international ventures like MAM and Sampo, they hold strategic value for things like developing lightweight tractors, building a center of excellence for rice transplanters, jointly designing the OJA platform tractors for India and Japan, and supplying tractors for the U.S. market. And their combine harvester COE, other product development, European presence, these are all seen as strategically important long-term plays.
But the headwinds are significant now.
Very much so. For M and Sampo, they expect a continued downturn locally, plus fewer exports to the U.S. now that OJA tractors are made in India. And more broadly, the Russia-Ukraine conflict is still a factor. There's an economic slowdown in Europe, weak global oil prices. It's just a tough environment out there for the international farm business.
Right. So strategic goals versus immediate tough market realities.
Exactly. It's contributing to those losses we talked about. A real balancing act for them.
Okay. Let's shift to financial ratios then, on the consolidated basis. What do they tell us about the company's overall financial health?
Looking at the key ratios as of March 31st, 2025 versus the year before, Well, the debt-equity ratio, excluding financial services, stayed flat at 0.07.
Which is quite low, right?
Very low.
Yeah.
Suggests they aren't heavily reliant on debt, which is generally good. Financial stability.
Mm-hmm.
Their current ratio improved slightly, from 1.3 to 1.4. That measures their ability to cover short-term bills, so slight improvement there is positive.
Okay.
And net profit margin also saw a very slight improvement from 8.82% to 8.84%. So making slightly more profit per rupee of revenue. Overall, the ratios suggest a financially sound company, maybe slightly improving its footing.
And we mentioned the auditor's report earlier. What was the final verdict from BSR & Co.?
Clean bill of health. They issued audit reports with unmodified opinions on both the standalone and consolidated financial results.
Which is the best outcome.
Exactly. It means the auditors believe the financials present a true and fair view, following all the accounting rules. Gives you confidence in the numbers.
Definitely reassuring.
Yeah.
Okay, beyond the numbers, the board meeting announcement covered other approvals too, right?
Yes, several key items. They set this date for the 79th Annual General Meeting, July 31st, 2025. It'll be virtual again. They also finalized the book closure and record dates for that dividend we mentioned. And then there are governance items seeking shareholder approval for Mr. Anand Mahindra's remuneration and the reappointments of Mrs. Nisaba Godrej and Mr. Muthia Murugapan as independent directors.
Standard AGM business, mostly.
Pretty much. Oh, and they also approved appointing Ms. Park and Associates as the secretarial auditors for the next 5 years. So ticking the boxes on governance and planning.
Right. And lastly, there was a note on borrowings, qualified borrowings.
Yes, just the details on their outstanding qualified borrowings. It actually decreased slightly from about 1,235 crores at the start of the fiscal year to 1,135 crores by March 31st, 2025.
So paying down a bit of debt.
A little bit, yeah. And crucially, they maintained their highest possible credit rating, pre-sable.
That's top marks.
Absolutely.
Really?
It reflects their strong financial position and ability to meet debt obligations. Very positive signal.
Okay, so let's try and wrap this up. Bringing it all together, what are the main takeaways from this deep dive into M&M's FY25 performance?
I think overall it's a story of strong financial performance in FY25, really propelled by that significant growth in the automotive segment.
Right.
The farm equipment side also grew, but it's clearly facing some, noticeable headwinds, especially internationally, with those write-offs highlighting specific issues. Consolidated ratios look stable, maybe slightly better. The clean audit report is a big plus. And the board decisions seem focused on governance and the path forward. So largely positive, but with clear challenges in that international farm space.
Okay. So considering all the strong auto performance, the farm challenges and turnaround efforts, the other business segments, here's something for you, our listener, to think about. What do you see as the most crucial long-term growth drivers for Mahindra and Mahindra going forward? Is it keeping that auto momentum going? Is it successfully fixing the international farm business? Or maybe something else entirely?
Yeah, it'll be interesting to watch which levers they pull most effectively.
Definitely something to mull over. We encourage you to dig into the results yourself, too. Thanks for joining us for this deep dive.